In this lecture, we're going to talk about what seems to be a topic that is dominating the media, and that is the coronavirus. Often referred to simply by the name COVID-19, the coronavirus is something that started out of China in the Hubei province and, of course, has spread to a lot of different areas, particularly in Southeast Asia, but we're starting to see reports come out of Italy and some other areas that is seemingly points to the conclusion that it is spreading beyond that kind of local geography area. And so the question we pose is this really a big deal? Now, depending upon who you talk to, the coronavirus is either the worst thing or is really not something to worry about and you should go about your day. But last week, in fact, we saw that the U.S. economy, the U.S. stock market in particular, erased $3.6 trillion from the stock market. Now, according to the S&P 500, which of course is something that tracks the movements of 500 large cap equities. So I asked the question, is this really a big deal? And up to this point, what was interesting is that the U.S. economy was actually at record levels the week prior. And in a week period, we erased all of that. And it actually does have a lot to do with the potential impact of the coronavirus. Now, one thing I want to mention is from a health perspective, it would be very flippant to say that this isn't a big deal. There's been an extraordinary loss of life and people have been severely impacted by this. Now, I'm not a physician, so we're not really going to get into those issues. And so if you're looking for how do I, what are the signs? You came to the wrong place. We're going to talk about what's the impact for businesses, because there is a pretty significant impact there. And part of the reason why we saw the U.S. stock market erase $3.6 trillion in value is because we kind of are coming to the realization that this actually could be more severe than we thought and might have some lingering effects. So let's get kind of into why. It really stems from China's role in the global economy. Now, China is, of course, a big player, not only from a consumption standpoint, having over a billion consumers, but also from a production standpoint, right? A lot of goods are produced in China, and that has a number of different impacts from U.S. businesses and those sorts of things. Now, if you look a couple of decades ago, in 2002 and 2003, we had what we called the SARS epidemic, if you remember that. And SARS was the severe acute respiratory syndrome. And it was a very bad virus. It had a very high fatality rate, higher than COVID-19, at least at this point, which meant the likelihood of you dying from it was greater than if you contracted the coronavirus, at least at this recording. But it didn't have so much of a big impact. And that's because China's role on the world stage was pretty limited at this point in time. If you go back a little bit further, you would have noticed that in 2001, China was allowed to enter the WTO. And this was really big because China now has access to the global marketplace, and with access to trade, and you see many businesses begin to make investments into China, and China's poverty level begins to, the poverty percentage of those in poverty begins to decline, and China becomes kind of a bigger market for consumers. This was in large part because of they were allowed to enter the WTO, which gave them access to this market. So at that point in time, in 2002, 2003, China wasn't really a big player on the global stage. Now, that has, of course, changed over the last 20 years. China is grown significantly in a number of different areas. Just one to highlight is if you were to take the global consumption, if this circle here represented global GDP, so gross domestic product, which is the dollar value of goods produced, China would actually represent approximately 16% of that output. Now, just to give you a little bit of context, they represent 16% of output, but they are one of actually 195 countries that actually contribute to global GDP. So as you can see from a percentage standpoint, while China might represent a fraction, of course, of the number of countries. They are a very significant contributor to global GDP. And in fact, we're seeing this on a consumption level as well. Several companies have come out and said due to the coronavirus and the subsequent impact, they're having to reduce profitability or reduce the expectation of profitability. Disney came out just recently and said that its operating profit was going to decline by about $175 million due to the closure of its Shanghai and Hong Kong theme parks. Under Armour, another big company that does a lot of business over in China, is expected to lose anywhere from $50 to $60 million, at least estimated at this point. We have vehicle sales that are declining 92% in the first part of February due to the loss of consumption or decline of consumption as well. So as a result of businesses being closed and all these different things, we're seeing that this has a very significant impact on U.S. businesses as well. And that's because we live in a very global economy, and something that happens in other areas of the world, there's a ripple effect often through the supply chain from a consumption standpoint. Now, on top of that, China is a very significant player in terms of being a producer as well. So the simple elements that you want to understand to get this reference are what we would call a supply chain. So all goods have a specific kind of way of getting to their end point, and rarely is something in its finished form. So you need different businesses involved at different stages that provide a little bit of value and ultimately help us get products to consumers. So a pretty general supply chain might look something like this. You've got a retailer, which is an organization that sells the good to the end consumer typically. You may have a wholesaler, which wholesalers are entities that kind of act as intermediaries. They commonly take ownership of the good, but they don't always have to. But they kind of facilitate a transaction. They help reduce storage facilities. And many times they can get products into retailers because they have relationships. A good way of looking at a wholesaler is like a distributor kind of role, where they acquire a bunch of different goods and they get them to the retailer. And then you have the manufacturer. And the manufacturer is the entity that actually creates goods. But they might not have the relationship with the retailer, so they work with wholesalers who then have relationships with retailers. And then further on down the line, of course, you might have, in many cases, kind of raw materials companies that create the raw materials that are then used to help put together the product, whatever it might be. So it could be clothing. So obviously you need raw materials for that. It could be smartphones. Again, you need raw materials. And so the challenge here is that because we live in a global economy, supply chains are also global, which means a retailer might be doing business with a organization or company rather that operates in another area of the world. And so you might have a retailer or a business like Apple, for example, that actually has a lot of its products manufactured over in China. And then those raw materials might come from other countries, whether it be South Korea, whether it be raw materials in Brazil. And so you're starting to see that everybody's kind of just like, there's a spider web that kind of goes throughout the entire global economy, where you have one particular thing that happens and there's kind of a reverberating ripple effect, so to speak. So just to give you a little bit of context, let's look at kind of China's role, which in many ways is also in the manufacturing area. So China produces approximately 85% of the toys that are actually sold in the world, which is a significant number, right? So you think about businesses that are reliant on a supply of those types of goods to sell to consumers, they're certainly going to feel the effects because there simply isn't the supply available to meet the corresponding demand. One interesting statistic I saw was that Procter & Gamble assembles approximately 17,600 of its products in China, which of course is going to impact them as they run into supply issues and being unable to stock retailers. They're going to see a drop in revenue as well. And then also in the port of LA, which if you're importing something into the US from China or from kind of Southeast Asian countries, kind of that side of the world, you're typically going to go through the Port of LA. And the Port of LA itself is seeing a 25% decline in the number of containers that have come through in the month of February. Again, in large part because much of the manufacturing is being affected in China, so there's less product to move over to the US. Now, what does all this kind of mean in a nutshell? Well, it's really hard to kind of to look in the crystal ball and figure out what the impact is going to be, and that's because nobody really can see the future. We're really good at looking in the past and explaining how it happened, myself included, but in terms of making predictions, that's where it gets more difficult because there's a number of different variables, and this is kind of uncharted territory. But according to some economists, they think that ultimately the widespread impact of coronavirus could result in a subsequent decline of $1 trillion in world economic output. So $1 trillion decline, which is as a result of declines in manufacturing, declines in exports, and also declines in consumption, due in large part to the coronavirus outbreak, not just China, but other areas as well, as we've seen the virus begin to spread somewhat over the recent days. So you can see even something that happens on one side of the world has a drastic effect throughout the whole global economy. And in many ways, that is largely due because China is a very important country on a world stage, not just from a consumption standpoint, but also from a producer standpoint, in allowing not only US, but also other countries' companies to be able to source the types of products they need to be able to sell to their consumers.